Well, hello and welcome to Missing a Trade. All right, missing a trade. Now, this is something that I have literally thousands of hours of experience doing. No, it's actually kind of funny because just like everything in life, when you first start something out, everything is new, it's different, you're not really sure. And then after you've done it for so long, everything becomes very routine. And it kind of takes talking to someone who's brand new at the job to remember some of the things that you struggle with and some of the questions you had. And so whenever we talk about this concept, missing a trade, where I am now after 20 years is obviously completely different of where I was in my first 6 months. So a lot of the things that I'm going to be going over are things that, of course, experience has taught me. And I'm sure many of you have gone through a lot of the same process of where, missing a trade was such a big deal. But really, this is the psychological side of the business of trading. And what a lot of people think trading it's all about a chart. It's all about what's in the books. It's all about theory. And in reality, it is all about that. But the problem is we are involved in the process. And as soon as we get involved in the process, our psychology really will get in the way. And this is one of the things in the market, the fear of missing out, or the fear of not getting in at the right time, or all these things. It comes into your subconscious. And I've met many people over the years, and it's funny, the people that think they're the most unemotional, they end up being the ones that actually struggle the most with these things, especially like something like an engineer type. An engineer type that does everything by the book. Everything in their life is a system. So if you connect A to B and B to C and C to D, then you always get the result. Example like a light bulb. If you apply power to it and you run all the cabling and the wiring exactly how it should, that light should always turn on. The problem with trading is it doesn't work like that. It does work like that when you look at statistics over a large group of trades. But on any one given trade, you can do everything exactly right and still have a loss. And so all of these things, these psychological things, creep into your subconscious and actually will cause a lot of issues. And what we're talking about in this session, missing a trade, is definitely one of these things that can affect your next trades. It can affect your next month, and it can affect your next quarter in the next year. And so I want to make sure that everyone understands the correct psychology, understand that this is just like anything in life. It's like when your parents told you, hey, this is something you don't want to do. You probably all had to go out and try it and figure out, oh yeah, my parents did know what they're talking about. And then over time, you just get used to it and more mature. But being self-aware is just a huge part of trading. And I always say that, look, until you're self-aware, you cannot fix any of your problems. Now, I'm not going to get into everyone's life. And I'm not going to delve into your personal life. I'll let you be self-aware on your personal life outside of Maverick. But inside of trading, being self-aware, because you are going to do things based on your personality and based on your experience. And unless you are self-aware, you will never fix any issues. If you have a deficiency and you aren't able to be self-aware, you will always have that deficiency. And so one of the things at Maverick is we always want to talk about the psychological side and make sure that everyone is really thinking about, okay, I've made the same mistake twice now. Why do I keep making it? Because if you can't figure out why you keep making it, you'll never be able to fix the underlying issue. And so this fear of missing out on a trade is a huge thing that can really, really cause issues. And regret is defined as a feeling of sadness or disappointment over something that's happened, especially when it involves a loss or a missed opportunity. Alright, so again, this feeling of regret. Now, I remember always feeling like I was missing a trade, or oh my gosh, I knew that was going to do this, or I knew this stock was going to do this, and I knew it was going to do this. And it caused me to have these feelings. And as I said, you take those feelings into your next trades. You take the things that happened in your last couple of trades, and you take those into your next trade, and because of how you feel, you're actually going to treat that trade differently. One of the most common ones that I see is someone uses a stop loss, and again, we're going back to the basics of trading. Hopefully, none of you are using just a standard stop loss, but people use a stop loss, and a couple times they get knocked out on a stop loss, and then the stock rebounds and goes exactly where they thought it was going to. And so that happens to them 2 or 3 times. So what happens? On the next one, they don't put in a stop. And this is the one that goes against them really hard and ends up taking them out. Again, what happened in the prior trades before that completely changed how they handled the next trade. So every single trade really should start completely fresh without anything from the past. However, we're human, so we have to deal with this. So let's talk about this missing a trade. We feel all the times we miss this, we miss this. Let's talk about what it really is. All right. So let's just do an example, because I want to make sure that everyone understands the difference between what a lot of people think is missing a trade and what missing a trade truly is. Alright, so here's an example. You've been watching a specific stock or an option combo. You thought it was going to break out. You said, hey, when it breaks out above 95, I think it's going to run to 100. And sure enough, it happens. You didn't get into the position, and now you're kicking yourself for missing the trade. And you're thinking, oh, I knew that. Alright, now let me correct this right here. This is not missing a trade. This is a move that happened in the market that you weren't in. And guess what? These happen all the time. I mean, right now you could take a look at a stock, and in 20 minutes, you could say, oh, I missed that. I missed this. I mean, things are moving all the time, like right now. Maybe if you're watching this on a video, the market's closed, stock market, but guess what? The currency market's open. And something is moving. Something is moving, and you haven't got into it. Now, for the most part, we understand that, and anything outside of our vision, so if you're not looking at your screen, it happened, and you never even noticed it happened. Or you check back in a month later and you say, oh wow, I didn't know this thing ran from 50 to 60. Those things all the time, they happen and they don't bother us because you don't see them. It's the things that we see that we actually start to carry some baggage with. Now, I want to clarify this right here. This is not missing a trade. This is going to happen all the time. All the time. Again, this stock comes out, has earnings, it jumped up. You thought it was going to jump up, but look, you didn't do any actual work on setting the trade up. You didn't do any of the actual work. It was just movement. So what I really want you to do is I really want you to understand the market is always going to be moving. The market's going to be moving. This is going to go up. This is going to go down. And frankly, you aren't going to catch them all. You understand that. So let's really talk about missing a trade. And basically, to me, missing a trade is chickening out. And again, that is what I really wanted to go over here, is chickening out. So again, we understand movement's going to happen. Stocks are going to go up, stocks are going to go down, things are going to move. Of course we can't catch them. Missing a trade is where you've actually ran the numbers. You went in, you identified the chart pattern, you found your entry price, you found your target, you determined your time frame, you planned out your stop or abandon point, you looked at your options combo that you were going to do, you planned out the risk reward, you've got everything set up, you even went to the point where you built an order. where you built an order on your trading system and then yet you didn't click the button. That right there is the definition of missing a trade. Everything else, let it go. Let it go. Movement happens all the time. Over 20 years, do you have any idea how much movement I've missed out on? How many times stocks have gone up 10% and I either watched it happen or didn't even know that it happened? I mean, it's happened so many times. You just got to let that go. Missing a trade is when you've actually gone and run all the numbers. It fit every single part of your criteria, and yet you didn't click the order button. That's missing a trade. Everything else, let it go. So let's talk about why. What are some of the psychological things that are going to cause you to basically chicken out? And this is a list of things. Fear of loss, fear of gain. We've got unsure of analysis, conflicting sources, need more research, and prior trade results. Let's talk about all of these just really quickly. All right, the fear of loss. All right, so the fear of loss. This is something that will definitely keep people to not take action, is the fear of loss. Once you've traded long enough, and again, all of this comes down to, and let me back up just a second here. If you look at trading in a singular trade, and what I mean by that is, let's say right now you are looking at Microsoft and you are going to make a trade on Microsoft, and that's all you're looking at is the trade right now on Microsoft. If that's how you're looking at trading, I'm telling you what, you are going to be bringing in a whole lot of emotional baggage into every single trade you make, because your outcome on that one trade is your only focus. You are singularly focused on that Microsoft trade. So of course, you have a fear of loss. You understand that this is a binary result. If you make a trade on Microsoft, it's either going to win or lose. And for some people, that fear of that loss is very tough. You are going to lose some trades, and I think everyone understands that. Fear of gain. This is kind of a strange one. This is not everyone has this personality trait, but there's some people that really sabotage themselves as far as success goes. Now, I do have to say that it's very highly unlikely, if you have this personality trait, that you would ever choose to go into the world of being a professional stock trader. This is definitely a rare one, but out in the world, people definitely have a fear of gain. They say, well, what if it does this? What if it goes up too much? What if this? What if I have to pay too much in taxes? I've heard that one before. Well, if I make all this money, my taxes are going to be a nightmare. I always think to myself, what are you talking about? Your taxes should be a nightmare. You should have to pay a lot of tax. That's a very good thing. Now, of course, we want to pay as low as tax as legally possible, but that's a good problem to have. That's a good problem to have, is trying to figure out how to pay less in taxes. Unsure of analysis. Okay. Now again, this all goes back to if you're looking at a trade as a singular trade, and you have a binary option of gain or loss. When you look at trading like that, it's very, very difficult. You're going to bring in so much baggage. And so you're looking at your analysis and you say, I just don't know if I'm going to be right. Well, of course you don't. Of course you don't. The most dangerous words I hear from traders, and I hear it every so often, is when they tell me they know they're right. And I say, oh my gosh, this is dangerous. You don't know. You don't know. You can say stuff like, I'm highly, in the past when these things have happened, it's been highly likely to be successful. You can say something like that to me. But please don't ever tell me you know something's going to happen, because you don't. Anything can happen. And so this whole thing is unsure of analysis, is when you're putting so much pressure on yourself to be right on this one trade. The analysis you've done leading up to that can definitely be put under the microscope. And you can say, well, I'm not sure. Maybe I need a little bit more data. Maybe I need a little bit more data. Or maybe I need to do a little bit more research. And that's another one. And then the need for more research comes from the need of being correct on that one trade. Next one, conflicting sources I want to talk about. This is something that it's kind of funny because when I first started trading, I love analysis. I love study. If my wife is here, she would definitely be able to tell you when I go out and I make a purchase, I study it. I go online. I look at the product descriptions. I look and see what's better. I always have this internal thing in my mind going as far as cost and value, and everything needs to be done as efficiently as possible. So when I started trading, I loved research. And I used to listen to conference calls. I used to dive into message boards. I used to do so much research. And I actually found out that that was hurting me quite a bit, because if you do enough research, you will always find something that doesn't match up. So let's say that you have a strong stock in a strong sector, it's breaking out, and you decide, I'm going to look at 3 or 4 different technical indicators. I can almost guarantee you that one of those 4 technical indicators is going to be telling you don't buy it. Stochastics is going to be overbought. RSI is going to be too high. There's going to be this, and something's going to tell you, nope, don't do it. It's kind of funny because doing too much research is actually counterproductive. It's counterproductive as a trader. But it all comes back to looking at a trade in a singular event. I need to be right on this trade. As a trader, you really want to look at trading as an event that happens over months and years. I'm going to follow proper charting. I'm going to only be bullish stocks in strong sectors in a strong market, and I'm going to be bearish stocks in weak sectors and weak market, and I'm going to do 100 of these trades every single year, and I'm going to try to be right more than I'm wrong and make more money on my winners than I lose on my losers. If you have that mentality, you can see that a lot of these things go away. The fear of loss on the one trade you're making today, well, guess what? That doesn't really matter if you have that outlook. Unsure of analysis and the need to do more research. As you can see, your whole sense of well-being is not going to be determined by today's trade on Microsoft. It's just not. Because you're looking at it saying, look, I'm going to make 100 trades this year. I'm going to make 50. I'm going to make 150, whatever it is. I need to be right more than I'm wrong, follow proper charting, be on the right side of trends, and control and manage my risk. All of a sudden, you see you don't need to do as much research. And I tell our traders all the time, I'm almost a little embarrassed to tell people how little research that I actually do. I do a lot of research on the markets and on the sectors and on the industry groups. That's where the majority of my time is spent, looking for new trades, because I truly believe that the least important part of the trade is the actual stock that I pick. And the reason I say that is, again, we follow the 50-30-20 rule. 50% of what your stock does is likely going to be tied to what the market does. 30% is going to be tied to the sector, 20% is going to be the actual stock. So the least important part of the whole trade is the stock. If you are long a stock in the strongest sector in the market that's breaking out, and you're long a decent stock in that sector, you're going to make money on the trade most likely. It's the least important part. And plus, if you're making 3 or 4 trades in the same sector, you can see that it just doesn't pay to do a lot of research. And the more research you do, here's where I think that too much research is very negative. You start to get invested. And what I mean by that is I'll have emails from traders that will send me this long email about this, all this research they've done on a particular trade. They've spent hours and hours of research. And at that point, they are now invested. They have time, they have effort invested in this trade. Because of that, they want to be right. And the more time and effort they've put into it, the more invested they are in the outcome. So again, at some point, research becomes counterproductive. All right, let's move to the last one, because this is really the one that I see happening the most. Prior trade results. This is one of the most difficult things, is to not take your last couple trades into your next trade. Let's just give an example. Let's say that a trader has had a pretty good year, and again, we talk about statistics a lot, and a trader with a 50-50 win-loss ratio has a 31% likelihood of having a 7 consecutive loss streak over their next 50 trades. Again, that's just, we talk about these statistics in one of our other sessions. But so again, let's say we've got a trader, they're 50-50 on win-loss. They've got a 31% chance of having a 7 consecutive losing streak in their next 50 trades. So when that happens, and again, if they make enough trades, this is going to happen. They are going to have 7 losers in a row. They need to do their best to not bring that into their 8th trade. Now, let's all be realistic. How do you think you're going to feel? You're going to feel like, oh my gosh, everything I've been doing lately has gone bad. Every trade I've made hasn't worked out. I'm not very smart. I'm dumb. I'm not seeing the market. Maybe my system doesn't work anymore. Again, all of these things go into your mind. And you start to get a little gun shy. And so the 8th trade, it fits all your criteria. It looks good, but you have a hard time clicking the button. Or you do like a half position size. Well, let me do a half position size here. Or let me wait a little bit and just get a little bit more confirmation. Hopefully everyone can see how that really is going to be affecting you as a trader. And we need to get everyone prepared for that, because there will be a losing streak. You will have a point in time. And again, this is another one that I see, is where a trader has a pretty good year, and then either a month or 2 in a row, going into monthly options expiration, their trades that look good all of a sudden went sour. So that 3rd month, as they're looking and they're 1 week out from options expiration, and they see that their trades are doing pretty good, where they would have just held them into the end of the trade that they planned, they all of a sudden start to remember, oh my gosh, this happened to me the last 2 months in a row, where I was in this same position, I was up a couple $1,000s, the market turned and it burned me. So then they decide to change their strategy. Then they decide they're going to throw out their trading plan that's worked for months, and they're going to change their strategy. All from prior trade results. Every single trade needs to be its own trade without any baggage being brought into it. Now, of course, that is extremely easy to say. Extremely easy. It's more difficult to do. And look, I've been doing this for 20 years, and when I have a losing streak, it still gets to me. All right, so let's talk about each one of these and just really talk about what you can do. Now, realize that there's probably very few people that are going to have all 6 of these. So what I want you to do is just really focus in on the ones that you know you have. If you know that you have this fear of loss, really think about what I'm about to go through, and really about what I talked about as ways to, again, be self-aware, to tell yourself, okay, I have a fear of loss, but I need to look at it in a different way. And again, we talked about the fear of loss is really all about, it's one of 2 things. Either number 1, your position size is too big. So if you have a position and you actually fear the loss from that position, I'll tell you right now, it's too big. If you've position sized it to where you're going to lose half of your account, if the trade doesn't work, yes, it's a big deal and you should be worried about it. However, if it's an appropriate loss as a small percentage of your overall portfolio, it's much easier to go into that trade knowing, hey, I'm trading a $50,000 account. This thing is position sized for a max loss of $500. That's a lot easier to go into that situation with the fear of loss. Also, we talked about looking at trades as a part of a whole. Not as just an individual trade, not as a singular trade, but as a basket. It's the reason why during our training, we have our traders journal everything in baskets of 25. So if you look at the journal, there's 25 lines, and then we do win-loss, risk-reward. We run all of our numbers off of 25 trades. Because over 25 trades, we can tell, okay, is this person consistently doing it correctly? Or on any one given trade, anything could happen. And as I pointed out earlier, this is where engineers have a hard time, because in their world, when you put together everything and it's perfect, you always get the same result. That does not happen in the market. That doesn't even get close to happening in the market. What you get is you get a distribution of results that, again, based on your strategy, should produce a profitable return over 100 trades. So again, if you have this fear of loss, position size, if you ever are worried about one specific trade, it's a good sign that position sizing is off. So again, position sizing and looking at it as part of a group. Alright, unsure of your analysis. Alright, now this is where, again, I wish that I could wave a magic wand and have all of our traders to where they know that they're going to produce a profit after a basket of 25, 50, 100 trades. It's one of the reasons why we say, look, you got to put in the work on this. I still, every so often, jump onto a trading simulator. Again, we've got our trading simulator at Maverick. There's some out there. The one I really like out there is called the Chart Arcade. This is where you can kind of compete against other people, and I think that's kind of fun to do. And when I have a little bit of free time, I'll sit there and just bang away on a simulator, just making trades. And I've always said, look, I know for a fact, and I've proven it out, that I can jump on a simulator, and after 50 trades, I can have a pretty good positive return. That only happens after you've put in the time and effort. So if you don't have that confidence yet, it's just a matter of putting in the time and the work. So I highly recommend jump on a simulator. Get to where you can sit down, and after 20, 30 minutes on the simulator, you always have a return. Always. And then you start to realize, well, geez, I don't need to hold on to any one of these losers. I know that if I make enough trades, I'm going to have a profit. And all of a sudden, it's no longer about the analysis of the individual stock. It's now about your system. And you start to have confidence in your system and your trading plan, and you don't even really care about the individual analysis on the stock. And again, having confidence in your plan and your system is huge. So again, this is something that if you're not there yet, as I said, if I could wave a magic wand to give you confidence to where you knew that over 50, 100 trades, you knew that every single time you could produce a profit, this is just going to take time and work. Again, I highly recommend jump on a simulator. I highly recommend jump into Thinkorswim, Think Back, and practice your options trades, and get to the point where you can make 10 options trades from past behaviors and produce a profit. The great thing is, nowadays with technology, you can do this. When I started 20 years ago, you couldn't really do this. There weren't simulators, there wasn't Think Back, there was no way to go back in time. There was only demo trading. That was the only way that you could see if you could produce a result without a risk of loss. And demo trading took a long time because you had to wait. Every single candle was literally a day, and it took a long time for you to actually get enough experience, hundreds of trades, to where you had some confidence in your system. And most people would never be able to demo trade for, it would probably take you 3 or 4 years, and able to have enough trades under your belt to get that confidence. Use that simulator, jump on, get to the point where you absolutely have absolute confidence in your system. After that, you're going to see that the analysis of the individual trade is not that meaningful. It's not that meaningful at all, and you'll no longer even care about the analysis of a given trade. You'll just care about following your system. Alright, and then let's talk about prior trade results. Again, this one I think is the most difficult one, and the one that I see our traders be affected by the most. Every time we do our summit in Vegas, we usually do a summit, our yearly summit in Vegas, about every 2 or 3 years, usually every 3 years. We typically always add in a kind of a gambling analogy, since we are in Vegas, and we talk a lot about odds. And we talk about perfect basic strategy, which is how you need to play blackjack. Now, what perfect basic strategy is, if you don't know, it is the mathematically correct way to play blackjack, where every single hand you get has a predetermined outcome of what you're going to do. So with perfect basic strategy, there is absolutely no decision making involved. There's no thinking, there's no anything. If you get dealt a 15 and the dealer has a face card, you always hit. Always. It doesn't matter if you're on first base, it doesn't matter if you're on third base. If you don't know what that is, blackjack, don't worry about it. It doesn't matter whether there's a lot of cards in the deck or not a lot of cards in the deck. It's just you always hit it. Why? Because mathematically, you have the highest odds to win based on 100 of those situations. So you're not thinking, you're just following your basic strategy. And so, again, with trading, it's the same way. You've got to have confidence in your system that if you keep betting your system, that you're going to have the right results. The other thing, again, is to understand statistics. Even if you flip a coin, if you flip a coin 100 times, understand that there are going to be times in those flips that you're going to have 8 heads in a row. And there's going to be times where you have 5 tails in a row. There might even be a run in there where you have 14 tails in a row. If you understand that and you're flipping a coin, then there's no reason for you to ever deviate. And again, it's always going to be a 50-50 toss. Even if it's been tails 13 times, the next toss is going to be 50-50. Understand the nature of statistics, understand the nature of streaks, and make sure that you are trading accordingly to that. I'm going to point you to a session we have. It's in our advanced topics or advanced concepts section of the website. It's called Dealing with a Losing Streak. If you are having some difficulty in this, watch that video. It talks about how to correctly deal with that losing streak. Alright, well again, let's wrap this up. First of all, hopefully from here on out, you will take the definition of missing a trade as chickening out, where you ran the numbers, you built the order, you were ready to go, but you chickened out. Everything outside of that definition is not missing a trade. Look, things are moving all the time. You're one person. You can't see everything. Even the stuff you're looking at, you're not going to catch it all. I mean, it's a great example if you go out hunting, you know. If you go out hunting and you're hunting for elk, and again, let me just preface this all by saying I have never hunted before, so if I get my terminology wrong, please forgive me, hunters. I know, I don't get it, but if you're out hunting for elk, you're up in the mountains or out in the forest or wherever you go to hunt. Things are going to be moving. There's going to be birds flying around. There's going to be squirrels. There's going to be deer. There's going to be, doe. There's going to be so many things moving around. That's just movement. You're hunting for elk. You're hunting for elk. There's going to be tons of things moving in that forest. You didn't miss anything. You weren't even hunting for that. You were hunting for a specific thing. In the market, you are hunting for a specific thing. If all you do is you buy high bases and you sell low bases, you're hunting for that. Everything else is just movement. Everything else is just movement. And then the last thing to really understand is the system. The system is so much more important than the trade. If you have your system, you've tested it out, it's produced results, you believe in it, you just got to follow that system. And you'll understand that there's more and more importance of that system than there ever is on correctly analyzing the Microsoft trade you're going to make today. As far as your yearly return, that is so insignificant, but yet we put so much pressure on ourselves sometimes to get that decision right. The right decision is to put in all the time and effort developing your system and then following that. Right, hey, thank you very, very much for joining you. Again, I really want, just in that summary, I really want everyone just to understand that missing a trade is not movement. That's going to happen. Let it go. And if you ever feel yourself that you've missed out, like, oh, I knew that was going to happen, think about my hunting analogy. You could be hunting for an elk and a 6-point deer could walk by. Guess what? You didn't buy a deer tag. You can't take it. That's not even what you were hunting for. You were hunting for a specific thing. And even if the biggest, I don't even know if you can get a 10-point deer. Maybe you can't. Maybe it's the greatest thing in the world. But even if a 10-point deer came along, you didn't miss it because you couldn't even take that, because you weren't hunting for that. You don't even have a deer tag. You have an elk tag. You can't take that. So in the end, let movement go. You're not missing out on anything. If you find yourself, again, chickening out, which is my definition of missing a trade, then you really have to become self-aware and understand why it is you're doing it. Thank you for joining me, and everyone take care.